Alphabet, or aka Google share price, is down 8% in the last 2 days because there's a panic in the markets. There's a perception that Microsoft's new AI-driven search engine and browser is going to disrupt Google's market share, going to kill their business. So how much of a threat does Microsoft's Bing search engine really pose to Google? Let's find out more in this video. Now, I own both Microsoft as well as Google or Alphabet in my portfolio. In fact, I've got more Microsoft shares than Google shares. So I'm kind of like a father who has got two children that I love very much. I love them equally, and they're both competing on who's getting the better grades. So in other words, whoever wins, I win. So because I love both stocks equally as much, let me give my pure unbiased opinion on whether I think one of my children, Microsoft, is going to take away the lunch of my other child, Google. So this whole war started when Microsoft announced that they were going to integrate ChatGPT into their search engine Bing, as well as their browser, which is called Edge. And for those of you who have been playing with ChatGPT, know how revolutionary it can be in the whole search process. It's like having a personal virtual assistant that can give you a customized single answer. You can ask it to write a poem for you, write an essay, create a piece of code, write an itinerary for a trip to Tokyo. It's pretty amazing stuff. Now, the thing about AI is that Google is actually the one that's been investing in AI for the last 10 years. It's way ahead of AI. But Microsoft has now created the perception that it has jumped ahead because it announced that it's integrating this AI chatbot into its search and web browser. Now, bear in mind, it's not fully integrated, it's just a demo version. And of course, Google didn't want to look like it was losing out. So Google quickly said, we are going to have our own AI chatbot as well. They call it Bard. And they rushed out an advertisement showing how Bard AI could be integrated into a search. Now, Google already had this technology for many, many years, but they didn't want to release it yet because they wanted to be sure that they didn't want to rush things. But because Microsoft came out first, now they had to rush to show that we are also in the game. But unfortunately, during that demo and advertisement that Google did, their chatbot made kind of like a mistake. But what new discoveries from the James Webb Space Telescope can I tell my 9-year-old about? So Bard, which is Google's AI, came up with 3 answers, and the third answer was actually factually wrong. Now, first you got to understand that ChatGPT, owned by Microsoft, also has a lot of errors, a lot of mistakes as well. So this is not something different. But people's perception is that, Google's supposed to be ahead, it's a leader, it's reliable. So that kind of like got people to panic, like, your chatbot is not that much better than Microsoft's chatbot. So that was the first problem. The second issue was that the CEO of Microsoft, Satya Nadella, I call him Nutella, right? So Nutella came out and he said that he was very confident that with this new AI-infused chat and browser that Microsoft was going to take away market share from Google's search business. And because search is a big part of Google's business, investors panicked. Now, it's important to bear in mind that Microsoft has actually been trying to take away Google's search business for 10 years using their Bing search engine. So this is not something new. But what Nutella is now saying is that because of their AI-driven search, they're able to now have a strong competitive advantage to take away market share from Google and lower their profit margin. So the combination of Nutella's speech plus Google's blunder is what made investors panic and sent the share price down 8% in 2 days. As an investor, you have to do your research and look at the facts. To ask this question, is Google's share price drop an overreaction? Is it just an emotional overreaction? Or does Microsoft really have a chance of taking a significant market share away from Google's search business? So let's find out more right now. So the first thing is to look at what's the current market share of search in the market. So as of 2022, Google has a 92% market share of global search. In second place is Bing, owned by Microsoft, and you've got Yahoo, 1.23%, Yandex, Baidu from China, and DuckDuckGo, which I've never really heard of, right? But 0.6%. So for many, many years, all the other search engines, especially Yahoo and Bing, they have been attempting to take away market share from Google for years and years and years. They have not been able to do so. So the question is now, with AI chat infused into their search engines, do they have a chance? Now, so why is it in the last 10 years, competitors have not been able to take market share away from Google that much? Because Google has what we call a sustainable competitive advantage or economic moat that protects them from all this competition. So what are the sources of Google's moat? And with AI, can Microsoft Bing or other search engines disrupt Google's economic moat source? So first we have to understand what's their moat source. There are 5 sources of their moat that gives them, again, this competitive advantage. First is their brand monopoly, simply what we call top of mind recall. We'll go into that more in a while. Number 2, their default position at the browser level. Number 3, their default position at the hardware and operating system level. Number 4, the quality of their search results. And finally, the Google ecosystem. So what do I mean? So the first major advantage that Google has is what we call top of mind recall. When you think of search, the first thing you think about, if you're like most people, is Google. In fact, Google has become a verb. It's become part of our vocabulary. We don't say, go search for this. We say, go Google this, go Google that. The same way when we think of cola, Coca-Cola is the top of mind recall. When we think of sportswear, it's like Nike. When we think about burgers and fries, it's McDonald's. It's just top of mind recall. So will there be a day when you say, go Bing this, go Bing that, right? I don't know. Leave your comments in the comment section. So if Google as a brand is in our top of mind recall in billions of people around the world, it's a habit that's going to be a bit hard to change. And as long as people have Google at the top of the mind recall, it gives them that significant competitive advantage against all other search engines. A survey from SurveyMonkey found that most consumers prefer any search results that have the Google label on top of the results, even if they are actually the search results pulled by Bing. Oh, poor thing. When given a choice between Bing search results and that are labeled as Google and Google search results labeled as Bing, respondents chose the Google labeled results by a ratio of 2:1. The study concludes that consumers are simply biased towards Google as a result of the brand, which has been a major reason that Bing has not yet made significant inroads against it. So really, that's the power of the brand. So sometimes even if another phone may be better in terms of features, but we still prefer an Apple phone. Even though another sport shoe could be of better quality, but we prefer Nike shoes. It's because we have emotional associations to brands. So that's the first advantage that Google has. Now, what's interesting is that they found that when people search using Bing, the Bing search engine, what were their top 10 searches on Bing? Right? Number 1 was they searched for Facebook. Number 2, they searched for YouTube, which is owned by Google, Alphabet. Number 3, they searched for Google. Number 4, they searched for Gmail, right? And they searched for Bing homepage quiz. So you can see that even when they use Bing, among the top 5 search results, YouTube, Google, and Gmail come out on their search preferences. So that's something pretty interesting. Now, the second source of Google's competitive advantage is that Google happens to be the default search engine for most browsers that people use. So globally, 65% of people use the Chrome browser, and Chrome is owned by Google. That's right. So this is owned by Google. 18% of people use Safari browser, and Safari is owned by Apple. 4.4% are using the Edge browser, which is by Microsoft. Firefox 3%, Samsung, Internet 2.61%, and Opera 2.4%. So what's interesting is you can see that for the Chrome browser, Chrome, Safari, Firefox, Samsung, and Opera, 1, 2, 3, 4, 5, out of the 5 browsers, their default setting is directed to Google search engine. Now, of course, people can always change the default search engine, but the default is towards Google. And that's why Google has a 92% market share, simply because the majority of browsers are set to Google at default. And the only browser that is not set to Google is, of course, Edge, because Edge is owned by Microsoft, so they will set the default of Edge to, of course, their own Bing search engine. So for Microsoft Bing to significantly take market share from Google, they have to convince the browsers to change to Bing at the default position. So can they convince Chrome to do it? No, because Chrome is owned by Google, so obviously they're not going to do that, right? How about Safari? Safari is owned by Apple. So will Apple change to Bing instead of Google? I don't think so, because right now Google is paying Apple $15 to $20 billion a year to put Google as their default search engine. So unless Nutella can seduce Tim Cook, come on baby, point it to me, man, then, well, it could happen, you never know, right? But until that happens, Safari and Chrome together make up a big percentage of browsers, and they all point to Google. So that's the second advantage. Now, the third competitive advantage that Google has is that, again, Google is set at the default position at the hardware and operating system level. That means it's built into your mobile phone, all right? Now, so Google has a default positioning at the hardware and operating system level on the majority of mobile devices. Bing's share is negligible as of current. So currently in the smartphone market, you can see that Apple has a 28% market share, Samsung has a 20% market share. So together they make up the majority market share of smartphone users, right? Now Apple, again, what's their default browser? It's Safari, which is owned by Apple, and Safari's default search engine is Google. Why? Because, again, Google is paying Apple $15 billion to make them their default search engine. So again, like I said, unless Nutella can convince Tim Cook to switch alliances, this would be a huge advantage towards Google. Now, Samsung's default browser is Chrome, which is owned by Google. So that also points to Google. Now, the rest, let's take a look. Xiaomi, which is the Chinese brand, their default browser is their own Mi browser, and default setting is to Google outside China. Within China is Baidu. For Oppo, default browser is Chrome, so points to Google as well. Huawei, default browser is their own Huawei browser, and their default search engine is, that's right, Petal. I never knew there was a search engine called Petal, but there is, and it's owned by Huawei. Finally, Vivo. So Vivo has got their own Vivo browser, and that points to Google as well in the outside China, and within China is Baidu. So again, you can see that in terms of the hardware and operating system, majority still points to Google. And for Nutella to disrupt Google, he has to be able to convince all of them, Samsung, Apple, Xiaomi, Oppo, to switch alliances. And that's not going to be easy. Google's fourth competitive advantage is, of course, the quality of its search results. The fact that Google search results have the most relevance, the most reliability, and has got the widest quantity of search for users. So again, how good an AI chatbot is really depends on the data it is trained with. So sure, Bing could launch the first AI chat, but if the quality of its data is not as rich as Google, in the long run, it can't compete with Google's chatbot once they sort out the kinks, right? So studies from Google and Microsoft and academics have generally suggested that Google's search product is just simply better. That's why most of us use Google, because we get the best search results. You can see that numerous studies have confirmed this. Google has outscored Bing in each test in the US. The gap stood at 8.1 percentage points. Even in the UK, Google outscored Bing in each test. The gap stood at 10 percentage points. Now, the quality of a search engine's results is also down to what we call the web crawlers. They have got web crawlers that go out into the internet and they search for all these pages and they compile the search results. So you can see that the Google bot is the default on this chart, and you can see the relative access to sites for the different types of bots. Bing bot is slightly below, all right, this slightly below Google. Baidu Spider is way below Bing bot. DuckDuck bot is over there, Apple bot, Yandex bot, and so on and so forth. So you can see that Bing bot is close to Google bot, but is still trailing by a margin over there. The fifth competitive advantage that Google has over other search engines is the Google ecosystem. That is beyond just searching for information. So the Google ecosystem, as you know, consists of Google Maps, which are the best maps in the world, better than Apple Maps, better than Bing Maps. And no matter how much money Apple tried to put into the Apple Maps, they just couldn't compete with Google Maps. So even though I'm an Apple iPhone user, but I don't use Apple Maps, I use Google Maps, and so do a lot of other people. You got Google Calendar, the fact that Google Chrome stores your saved passwords and your payment data, right? So once your passwords are saved, your payment data is saved on, say, Chrome, it's very inconvenient to change to another browser, to change into another search engine. So that creates that switching cost that causes users to stick to Chrome, stick to Safari, and hence stick to Google. So again, the Google ecosystem, which is beyond search, is integrated into search results. It's a big part of Google's moat. And a significant portion of Google searches, as high as 46%, have local intention. So for example, if I'm from Singapore and I'm searching for, let's say I type in coffee on Google, you'll even show me where I can buy coffee around my area, which is localized. It's something that other search engines like Bing, they are not as good at, right? Or if I search for a place, you'll bring out Google Maps and I can look at a street view, and again, that's way ahead than Bing Maps or Apple Maps. So again, many Google searches also include results from Drive, Google Drive or Gmail, or shopping, or images or videos, or links to sites where passwords or payment options are saved via Chrome or Safari. It would take an enormous amount of investment from any competitor to recreate this whole ecosystem. So, in summary, can Microsoft's Bing significantly disrupt and take away Google's market share in the market? Like I said, I own both stocks. I love them both equally. So whoever wins, I will win. I've got no preference. But looking at the facts, that Bing is trying to gain market share by incorporating AI into their search engine. Now, it may seem like a big deal, but if you think about it, so what? Everyone else is doing it. In fact, Opera, have you heard of Opera? Opera's a web browser as well. Opera is also now incorporating ChatGPT into their web browser. And of course, Google is incorporating Bard into their search process. Of course, there are a few kinks they got to work out, but once they work out those kinks, it's going to be a level playing field where now almost every search engine, every browser is going to have AI infused into search. So it's no longer going to become an advantage to Bing because everyone's going to have it in a couple of weeks. So again, I don't think that alone will give them that significant advantage over Google. So for Bing to take significant market share from Google, now bear in mind, Bing will take market share. It will, no doubt. Why? Because Bing's market share is so small, it's like 3%, right? That it's easy to take market share. And Google's like 90%, it's easy to lose market share. So yes, Google will lose some market share, Bing will gain some market share. That's without a doubt. But will it gain significant share that it would affect Google's revenue and profits? I'm not sure. So leave your comments in the comment section, because to do that, Microsoft, to significantly disrupt Google and take away great market share, Bing will have to disrupt the 5 sources of Google's economic moat, right? So like I said, number 1, Bing will have to get people to think of Bing when they think of search and no more Google. So we say, you're going to Bing this, going to Bing that, okay? Number 2, Bing will have to get most browsers to point to Bing as their default search engine, which is going to be challenging because Chrome is the market leader and Chrome is owned by Google. So unless they can again convince Tim Cook to switch alliances. Number 3, again, Bing will have to convince hardware providers like Apple and Samsung to defect from Google to Bing as their default search engine. That again is not going to be that simple. Number 4, Bing will have to be able to provide high quality search results in order to disrupt Google. Now, again, the more people search on a search engine, the more big data it has, the better the search will be. The more data the AI has, the more it is trained, the better the AI will be. So in terms of that, you find that Google has a huge advantage because 84% of searches in the world go through Google, and only 9% of searches in the world go through Bing. So the fact that Google does more searches will make its AI learn more and be way more advanced because it's got more data to work with. So that gives it that huge advantage. Now, the fifth thing again is for Microsoft to compete with Google effectively, they have to build also a very strong ecosystem beyond just their search results. They have to build a strong ecosystem into their search queries and match local search relevance. So what do you guys think? After all this research I've shared with you, do you think that Microsoft Bing really has a chance to dethrone Google as the leader in search or to take a big part of their market share? Or do you think that this is just a lot of big hyped up talk by Nutella, that is all overhyped, and that Bing will just only maintain a small percentage of market share? I'm curious to know your thoughts. Leave your comments in the section below. But like I said, Bing will gain some market share because it's so small, it has to grow, right? And Google, because it's really got such big market share, it's of course going to lose market share slowly over time. But the good news is that the search market is growing at about 11% annualized. So in this scenario, even if Google loses market share to Bing, and they lose, say, 4% market share every 8 years, which has been the trend in the last 8 years, and the industry is growing at 11%, Google's revenue and profits will still increase even if they lose market share, small market share, because the whole industry is increasing. All right. Actually, this reminds me of a lot of past examples where a new upstart company using AI was, telling the incumbent leader that we are going to take away your market share, we're going to kill you. And a very recent example was actually this company called Upstart. So Upstart is a company that uses AI to do credit scoring, and they work with banks to lend money to consumers. And they were claiming that they would kill FICO, which is the incumbent leader. So in the US, most people have a FICO score that tells them their credit worthiness, and with the FICO score, they can get a loan from a bank. So again, FICO has been the market leader for many, many years, and Upstart is a new company that said, using AI, we are going to disrupt you. And what's interesting is that you can see what happened. Initially, there was a lot of hype, and Upstart, which is the stock over here, you can see it went up. And what happened to FICO? FICO, people panic, oh my God, you're going to get killed, you're going to get disrupted, and it dropped, right? Like what's happening to Google right now because of this hype. But eventually, you realize that it's not so simple. It's not so simple for a company to unseat an incumbent leader. It's not that simple. And now Upstart has collapsed, right? And you can see that FICO is now at all-time highs. So if you ask me, I think this is just a short-term overreaction of Google going down. Eventually, Google's going to go to all-time highs again, and that's my belief, right? And Microsoft will go up as well. So the question is, can they both succeed? And can my two children both do well? I believe so. So remember that Google has been the monopoly for many, many years. A monopoly means only one player. And let's say that one day Microsoft could come in and become a duopoly where there are two big leaders. Could they both do well? Yeah. So if you look at it in the markets, are there industries where there are two leaders, a duopoly, and they both make money? They both do really well. There are many examples. In fact, for example, I own both MasterCard and Visa. It's a duopoly. And either one you own, you will do really, really well. In fact, I own both of them, right? You can see over the years, both of them, their share price goes up together as the industry grows. How about SPGI, S&P Global, which is a credit rating agency, and Moody's? So I own SPGI, I don't own Moody's, but again, it's a duopoly. And you can see again, together, both of them do well. So it could be the case that both Microsoft and Alphabet, they will continue to do well over the years. So finally, let's take a look at Google's chart. So again, like I said, I already own shares of Google and I bought it many years ago. So the current share price is way above my cost price. But will I add more shares of Google? Yes, I will add more shares at lower prices. I'm hoping it's going to go lower. Again, as an investor, the lower it goes because of panic selling, the more I like it, because the more shares I can buy with the same cash I have. So to me, this overreaction, this sell-off, this panic is a great opportunity to add more shares of Alphabet. So the way I look at it, you can see that the short-term trend is still up. As long as the 20 moving average, the 20 EMA, this red dotted line, is above the 40 EMA, the short-term trend is still up. You can see this short-term trend, right? Wave up, wave down, wave up, wave down. So it's making higher highs and higher lows. So we call this a short-term trend, but the longer-term trend is still down. It's not up yet because the 50 moving average is still below the 150 moving average. And you can see that the 200 moving average is still sloping down. So the larger trend is still down, but the short-term trend is still up, okay? And again, you can see that in the last 2 days, it actually had this strong wave up, and now it has retraced to this support level. You can see this is a support level over here at about $93. So what I did was I sold cash secured put options at the $88 strike price. So what that means is that if Google goes below $88 and stays there in 45 days, then I'll be obligated to buy Google shares at $88, which I don't mind because it's bloody cheap. Plus, I received a premium by selling the put option. So minus the premium, you can see that my net purchase price of Google shares or Alphabet will be about $86. And this was a options alert that I send out to all my subscribers on the Ultimate Investors Playbook or UIP channel. And it's something that you guys can subscribe to. If you're interested, go to piranhaprofits.com or insights.piranhaprofits.com. So going back to this chart, like I said, to me, I see this overreaction as an opportunity to add more shares of Google. And if Google doesn't stay below $88 in 45 days, if it bounces back from here, then I won't get to buy more shares, but I'll just keep the premiums I sold on those put options. And for people who don't trade options and who want to build a position in Google, for example, you could build a position by adding shares at these support levels when they hit these support levels. All right. For traders, it's a different story. If you're trading versus investing, then wait for a confirmation of a resumption of the short-term trends. You can wait for like a bullish pin bar pattern, a bullish engulfing pattern, some kind of a candlestick pattern before you get in for the next leg up. So you have to wait for confirmation of a resumption of the trend. And of course, these are things we cover in our short-term swing trading course. So you got to know, are you entering as a trade or an investment? Whatever the case, remember that every crisis brings opportunity, but you got to know what you're doing. You got to do the research. I hope you enjoyed this video and may the markets be with you. I'll see you guys on the next one. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.